gentlemen, mad love and respect for passing through. I hope you are doing well. What is the situation right now with cryptocurrency? Quite frankly, ladies and gentlemen, it's got nothing to do with cryptocurrency. It has all to do with this bad boy in front of you. The yields, ladies and gentlemen. Bitcoin has a 3.5% problem. And what do we mean by that? If the treasury yields rise up to 3.5%, 4%, then that's going to be a big problem for Bitcoin. Why? Well, let's get to it. What is the treasury yield? Jump over to Investopedia. Quick definition says, treasury yield is the effective annual interest rate that the US government pays on one of its debt obligations expressed as a percentage. Put another way, treasury yield is the annual return investors can expect from holding a US government security within a given maturity. Now, the thing is with the treasury yield itself, it gives us two definitions, not two definitions, but it can mean two different things, okay? It gives us the idea how investors assess the economy in the longer term, but also high long-term yields can also be a signal of rising inflation expectations. So there is your definition of the treasury yield itself. What does it mean for Bitcoin, ladies and gentlemen? Well, listen, an article pushed out by Bloomberg talking about the idea that Jerome Powell's stance as being hawkish means that the Fed is going to be very aggressive when it comes to the interest rates that they're going to look to increase later on in September. Now, the problem that we've got is this. Wall Street, particularly NASDAQ, hedge fund managers, institutional managers have all pumped their money into the NASDAQ. And we're talking around a $7 trillion stock rebound. Okay. Since the last sell-off, $7 trillion has hit the marketplace. Now, the problem that we've got is this, ladies and gentlemen. If the yields are going to start rising, that means tech stocks aren't going to be favored because then traders and investors are going to be seeking value-based stocks because they want to see things in the longer term. You only come to tech stocks in principle just for volatility, all right? You want short-term gains, you run your money over to tech stocks. Now, the problem is that if the 10-year yields rise to 3.5%, 4%, that's going to be a problem given that the NASDAQ has had some big bets, okay, by all these institutional fund managers and hedge fund managers. And we've already had a phenomenal drop in the NASDAQ since Powell's speech, which happens to be the nice vector candle recovery that we mentioned last week, ladies and gentlemen. So what does that mean for Bitcoin? Well, listen, the way the market works is this. It simply can't continuously drop to the downside, okay? Because that's just going to shake everyone out. Everyone will have an expectation. It's just going to keep going lower. So the market, in principle, has to facilitate some profit-taking opportunities because not everyone is going long. Not everyone is going short, okay? So the market naturally is going to try and recover from this little drop in the NASDAQ. But the sentiment across the board says that if the Fed is going to be that aggressive with its interest rates, the money that's been pushed into stocks is going to start taking a little bit of a beating. That means, is it possible to assume that Bitcoin is going to drop even further? Why has it got anything to do with Bitcoin? Well, Bitcoin has a positive correlation to the S&P, all right? Now, if you find that Bitcoin's correlation to the S&P is roughly around 71%, okay? Coupled with the NASDAQ as well, S&P and NASDAQ tend to move in sync, okay? Look at S&P. You can see right there, S&P comes back into what? Vector candle recovery zones, ladies and gentlemen. Bang, there's that little green vector right there. And that isn't even the whole vector candle itself. So principle would say that we are expecting still some more downside movement in the S&P. We've got our vector zones right here, ladies and gentlemen, which we would assume that Mr. Market Maker is going to make that journey towards that zone. There's going to be a sell-off. That is what Wall Street is scared of. Because if the Fed's going to be that aggressive, then that means traders are going to start seeking value-based stocks. And then you're going to see heat maps like this, ladies and gentlemen, which show phenomenal losses in technology. Now, this is a screenshot, or should I say a heat map for stocks across the board. Now, this gives me a little good overview of what's going on in the stock market. I personally like to use MarketSmith. Okay, now MarketSmith is from Investors Business Daily. It's a great little platform and it's been around for such a long time, and it just brings up key volume in certain stocks. It gives me data on the stocks. Now, I don't really invest in stocks, but I like to look at this because if the bigger players are starting to release liquidity from stocks, as you can see, Apple on Friday sold off on volume above average, above the 50-day moving average right there of the volumes. Okay, you can see that Apple was above average, and this would be deemed as a distribution day for the stock market. If you go to the stock market itself, you'll see that NASDAQ was down 3.94%. That's a distribution day. Investors are getting rid of stock. Okay, volume was up 5.79%. That means they were running to cover themselves and get rid of stock. Dow Jones was down 3% and the S&P was down 3.3%. All right. So we know that money has left already the stock market. Is it likely to continue? Now, what I'm saying to you, ladies and gentlemen, is that there is a potential for price to recover in the chart. We would look to vector candles in the chart and try and pinpoint that narrative. However, if the yields themselves start showing price moving up and they start moving this yield from 3% all the way up to 3.5%, ladies and gentlemen, we're going to see that impact in Bitcoin, in Ethereum, in NASDAQ and S&P. So how are you going to try and exploit this, ladies and gentlemen? Firstly, you keep an eye on the treasuries yields themselves. Just look for the ticker US 10-year right there, and it will bring you up this chart. Roll over to Bitcoin. Have a look at where we are right now. So Bitcoin over the weekend has, of course, stabilized inside of this zone. And we've got the psychological ranges right here, and Bitcoin is trading within those ranges themselves. All right. We need to go into the higher timeframes to understand where Bitcoin is likely to end up. And more specifically, we need to go over to the monthly time frame. Why? Because, ladies and gentlemen, in 3 days' time, the monthly candle will reset. The monthly candle has fully recovered this green vector candle. If we jump back to last month, okay, when this monthly candle started, we had a conversation about this green vector candle, and we did say, by principle of the vector candle, we should see this getting recovered. They first initiated a move to the upside, come back into the recovery of the red vector candle, which happens to be, let's see, is it 50% retracement? Let's take the absolute high. Let's go down to the low of the candlestick. Oh, wow. 50% at least. 50% recovery of the red vector candle right there, ladies and gentlemen. And then they pulled it all the way back. Now, what's important about this monthly candle close? Pretty simple. And I'm not going to not just mention it now. I'm going to mention it again in a couple of days' time as we approach closer to the close of the monthly candle. But what's important is they have come back and recovered all of the green vector candle. Bitcoin in principle has this last wick from last month to show support. So in other words, what I'm saying to you, Bitcoin has in principle from this area here, it has approximately $1,131 of movement to show support. Ignore this one for a minute. The reason why I want to ignore this one is because this is where they last moved from. I'm not interested in this point in the chart until price breaks this. If Bitcoin can hold inside of this zone, then that is a good sign that whilst the NASDAQ is going to try and take a nosedive, if Bitcoin can hold, happy days. If it can't, it will release from this zone and most likely test the narrative of 17,588. Now, this depends on what you are as a trader, investor, what it is. It's going to make so much sense to you if you trade the higher time frames. If you're a kind of person that says, you know what, I'm going to go short on Bitcoin and just hope for the best, fine. If you're going to be the kind of person that buys Bitcoin and hopes for the best, fine. But as a day trader or anyone that's doing swings as well, there might be a little bit more time yet until Bitcoin actually shows its hand before it starts taking out this 17 zone. Okay? Now, another thing that we need to be mindful of is what is inside of this area. Well, we know there's liquidity, ladies and gentlemen. Check this out. In front of you is the heat map for Bitcoin in terms of liquidation points for longs and shorts. Shorts will be at the highs up here, and longs will be at the lows. It is clear as day that at 19,700, there's $697 million worth of long liquidations. Below that, there's another 600 million at 19,275. Below that, there'll be 700 million long liquidations at 18,000. And then the big daddy liquidity pool, which is $812 million worth of liquidations at 16,000. And that's just in this given range, ladies and gentlemen. Now, just because there's liquidity down here, it doesn't mean that price is going to come back to it indefinitely, okay? What it tells us is that's where the commitment is. So if you're a market maker and the liquidity is down here, are you only happy with 800 million or 700 million? What if you move price back up and encourage these guys to start adding more positions and then start encouraging other guys to put new positions? You see, the average trader, or should I say the average person that is dealing in cryptocurrency, is most likely not going to be considering the problem that investors have in the US stock market, in particular to the treasury yields. He ain't looking at charts like this because it's charts like this that are going to give us the sentiment. If Wall Street is already concerned that if this yield goes up to 3.5%, or in other words, if investors across the board change their narrative from investing in tech stocks and start looking for value-based stocks, which they favor in the longer term, that means money is going to be leaving the NASDAQ, and especially tech stocks, and going into value-based companies. And that means Bitcoin is likely to follow that behavior, okay? The person that simply opens a short and hopes for the best because he thinks Bitcoin is going to go lower is going in on false pretenses because he might think he's a genius because he opened a short and prices continue to go down. Even with the words of inflation and the R word being put out there, he just thinks everything's going to go down anyway. But you want to be meticulous and you want to be structured in your approach to trading. Justify why. If the sentiment across the board is Wall Street is concerned about yields going to 3.5%, then there's going to be an impact on that because that means money is going to be taken from one place and put elsewhere. Bitcoin is always last to move, ladies and gentlemen. It's last to move. So if Bitcoin in the next 3 days, now that we know this information about the yield, if in the next 3 days Bitcoin takes an absolute nosedive and comes down lower, it would then have to break this zone of 18,689, going into this 17,633, and then we will know where we stand by the time the candlestick closes. In other words, I would personally want Bitcoin to drop lower because then that would give me an aggressive candlestick, which means the start of a new monthly candle would likely see a bit of a recovery in the chart. If you can exploit that as a day trader, happy days. Look on the 1 hour time frame. What do you see Bitcoin doing? Bitcoin is just structured in this zone right here, coming to the 50 EMA. There's nothing happening in Bitcoin. Why trade the weekends? Yeah, we do get a bit of volatility, maybe for scalpers, but there's nothing much happening. Roll over to Ethereum as well. You can see Ethereum is a little bit more volatile in comparison to Bitcoin. All right, it does like to move quite a bit, but again, nothing's happening. And that fact that we're down a pool of liquidity tomorrow is going to make things even worse because any move that does happen, it's going to happen on light volume anyway. Which is why I say to you, ladies and gentlemen, always pay yourselves. Take the money and run. Now, given that we are going into a bank holiday tomorrow, ladies and gentlemen, I will be looking to do a live stream for you all because I will have time with my family, but I will be looking to do a live stream just to check in with you all to get you guys ready for the plethora of news that's going to be coming out this week, ladies and gentlemen. Check this out. In front of you are the financial announcements that are going to be coming out start of tomorrow. Okay, so we start it off on Monday with the FOMC member Brainard speaking. What's he going to say? Bit of an impact in the markets. Medium impact is expected, so keep an eye out on the New York session. I'll probably doing a live stream around about that time maybe, but I'll keep you guys posted. Then on Tuesday we have consumer confidence, JOLTS job openings, which is what is going to be a bit of a problem because they need people to be out of work for everything or inflation to come down. If people are in work and people are earning money, people are still going to be spending money. That's just going to be a problem for inflation coming down. Okay? Wednesday, we have the non-farm employment change. And then, of course, going into Thursday, the unemployment claims, the CPI for the Swiss. And then, of course, the manufacturing PMI for the US dollar. And then Friday, the big daddy of it all, the unemployment rate and the non-farm employment change. Okay, so we're going to have ourselves a very busy week, start of the month. which is round about the time when Bitcoin will finalize the monthly candle, which will be Wednesday evening or stroke Thursday evening on September the 1st. Really, Friday is the most important day, ladies and gentlemen, not because of the non-farm employment change and the unemployment rate. I get to turn 37. Happy days, ladies and gentlemen. 37 years young, man. What a story. Listen, if you've enjoyed tonight's video, ladies and gentlemen, and the brief update on why this information regarding the 10-year yield could be a problem for Bitcoin, for Ethereum, and for assets across the board, okay, I hope it's brought some enlightenment to you to be a little bit more vigilant when you do look to try and take trades or invest in any asset across the board. Do your due diligence, ladies and gentlemen. Make sure if you've got profits right now, pay yourselves, because no one went broke taking a profit, ladies and gentlemen, and you hear me say it all the time, okay? Now, if you are new to the channel, be sure to like and subscribe, ladies and gentlemen, so that you can check in with us when we bring the fire on Tuesday for that New York live stream. Ladies and gentlemen, it has been a pleasure. Go enjoy yourselves. It's the weekend. Take care of yourselves. Peace.